Hey guys, what's up? Welcome to a brand new series. In this series, I will go over ICT setups and highlight some things that I find really important in this strategy. As most of you guys know, I trade ICT. For the guys that don't know ICT is the inner circle trader. It's also a fellow YouTuber, but most important, it is a trading mogul, if we can call him like that. His teachings are way different than anyone else out there. So I'd really recommend you check it out if you haven't already, but I really can't imagine that. As most of you guys know, my strategy is based on ICT insights and ICT teachings. So what I want to do is to put out more videos this year. And of course, I'm also full-time trading. So I was thinking, okay, we can record the trading sessions, that is one. But the second thing is to go in hindsight or go in backtesting mode and then go over setups that I would take and explain my reasoning behind them. So that is exactly what we're going to do now. If you guys like videos like this, please let me know so that we can do more in the future. I will just go over some trades of the week and explain my thought behind them. Okay, right now we're in the charts. It is Thursday, the 12th of January. And as you can see, it is almost 8 a.m. This is 1 hour before London opens. Let's mark up the chart first. Let's get to the 1 hour and let's see if we have something from importance here. And we still have these fair value gaps that has not been filled yet. Of course, we have some more deeper, but this is the most significant, the most important right now. The spot sell side liquidity has been taken out. Buy side liquidity, buy side liquidity. Now we have a new buy side liquidity. We'll be laying above here. And if you guys want me to explain something in detail, please let me know. I'll just make a video about that. I will make a video about liquidity and liquidity zones in the future, most definitely. Then we scale down to the 15 minutes. We have a fair value gap right here. And further than that, we don't have any fair value gaps. What is relevant? Then on the 5 minutes, fair value gap right here, but that one has been filled. We have fair value gap right here. 5 minute fair value gap. Bam. Okay, so what are we doing now? Now we are waiting and we want to determine where our point of interest is going to be. So as you can see, for now, we were in a consolidation zone and we broke out of that consolidation zone. We started creating higher highs and higher lows. So we are still bullish. So what do we want to see is to see a reversal at some point to take price higher. So we can take our fib, put it at the lowest point, put it at the highest point of the impulse lag. So our optimal trade entry will be here. What I always do is I'm searching for a fair value gap, an order block, something like that inside of my optimal trade entry. My optimal trade entry is between the 61.8 fib extension and the 70.5 fib extension. But if there is none, I'm only taking one that is lower than the 70.5 extension. So in that case, it will be this one. I won't take gaps or order blocks that are higher. I really want them to be inside of the zone or beneath it. So this will be our point of interest. Let's mark it with a different color maybe. Make it like golden color like this. This is our point of interest. So I really want to see price to come here. Okay, let's see what is going to happen. And by the way, guys, I'm not entering if this happens. I'm not entering. I'm waiting. Even though there's all of this happening, this is all noise, right? This is all noise. Okay, right here, we could have entered, but my rules are saying that I want to see a fair value gap or an order block inside of this zone. We don't have that. This is the closest imbalance to this zone underneath it, and the only one in this case that has not been filled. So this has been, well, might be my target. So even though there's a reaction like this, we're not entering, we're waiting. Bam, as you can see, our imbalance has been filled. Okay, let's delete this. And now we are going down to the 1 minute and we're going to watch what price is going to do. We want to see an impulse lag going from this zone because it is still a bit risky to enter right here. Okay, as you can see, we have that impulse lag right here. So what are we going to do now? We take our entry at the fair value gap that is in this lag. This is the fair value gap that is in the lag. This is the only one actually. Maybe this will be one, but it still has to be formed. But also it's really important that we broke previous high. So now we put our stops underneath the first candle that forms the fair value gap. We put our take profit at our most recent swing high. That is 1, or we can say we are going bullish after all. So we can target this high or we can target the buy side liquidity instantly. And whatever you target depends on your situation, on your plan. My plan says that I target the most recent swing high. So we'll target this one, the most recent significant swing high. So we'll target this one. But let's say you build a buffer so that you can risk more, you can take more riskier trades, and you can take bigger trades. Then you could take this one. And if you're really aiming for big trades, or you want to pass your account in one trade, because this is an 8.8 R trade, and as you guys know, with my forex funds, you only need 8%, then you could target this one. Let's see what it's going to do. As you can see, we now entered the trade, and we took take profit 1 already, right here. So if your take profit was here, you would already be out of the trade with a 2.5 R gain on your account. Let's speed this up a bit. Okay, so as you guys can see, we had take profit before news exploded everything. So what can we learn from this trade, and what can we see, what can we analyze? Let's go to the 1 minute back again. So the first thing we did, we searched for a point of interest, and we based that on a fair value gap that has not been filled. It was in the zone of our optimal trade entry or underneath it. So this one was underneath it. Then we had a strong reaction out of the zone, and we saw our most recent high being broken and our most recent swing high also being broken right here. After that, we got tapped in. Our stops were protected by the first candle of the fair value gap. Then our first target was right here for a 2.5 R trade. This one got hit immediately after 5 minutes. Then our second target was right here at the high of the impulse leg down. Also got hit. Then I marked this up. This was a 15-minute fair value gap. Remember? As you can see, once we come in here, we got a huge reaction. So what you also could have done, but it's something for another video, that is trading both ways. Let's say you see this reaction, right? You see this reaction happening right here. Wait, let me delete this one real quick. You see this reaction happening right here. So you have a strong reaction on this 15-minute fair value gap, and you see market creating lower lows. Then you see a retest of this fair value gap, and we still couldn't close above it. So now you know, okay, this is a strong resistance zone where price is not going to trade past unless it first pullbacks or it is going to reverse from here. So then on the 1 minute, again, we have a nice fair value gap. After that, this happens. This is your entry. You put your stops above here. And this could be a trade down. So where do you put your take profit if you take this trade down? You take your FIB. You put it there. You put your take profits on your optimal trade entry. And guys, this is how you can capitalize the most on a trade like this, because this was a huge day. And I just want to show you how you can capitalize on trades like this. I actually took a trade like this where I scaled them multiple times yesterday, and I will make a video about that after this one actually. So I'm going to show you, look, this could be another 4.3 R trade, but remember, we're going for that buy side liquidity, right? So we are going bullish. So what is the next thing that you do? Optimal trade entry. Oh, how convenient. A 1 minute fair value gap. Perfect entry. What do? You take another entry right here. You put your stops underneath the first candle of that fair value gap. You put your take profit on your highs. Your first highs are here. Your second highs are here. Or the new buy side liquidity that will be here. Or the overall target that was around here. And as you guys know, this one would also get hit. But please only do this if you are a bit of an experienced trader already. Don't start with scaling in when you just start out trading. And this mostly has to do with your psychology, because you're going to be having so much risk on the line, and maybe you're going to scale in on places where you shouldn't. By the way, when you went down, this was also a very nice scale in. You have a 1 minute fair value gap around here again. You have this impulse lag right here. So this is your optimal trade entry. Fair value gap around here. Look, the others have been filled. This one was filled. This one was still open. And I know this is probably a 5 minute fair value gap, something like this. But we're refining it on the 1 minute. We only take one that is in our optimal trade entry or above it. So this one was the trade. You took it at the beginning. You put your stop loss on the first candle that forms it. You put your take profit underneath the first swing low that you encounter, or at the overall target that was around here for your shorts. Guys, this is so simple. I will make more videos about this. You just have to wait for the right setups. Guys, if you enjoyed this video, don't forget to leave a like down below. Don't forget to subscribe if you're new to the channel, and then I will see you in the next one. Bye bye, guys.